Meanwhile, Nigeria's parliament is debating a new oil bill. Foreign companies say it could drive away billions of dollars in new investment. VOA's Scott Stearns has more from Abuja.
Demyaki and Vincent, the petroleum industry bill before Nigeria's parliament allows the government to renegotiate old contracts, increase costs for oil companies, and reclaim plots that are not yet explored. Since taking temporary power last month, Nigeria's acting President Goodluck Jonathan has made the petroleum bill one of his main legislative priorities, saying quick passage is vital to national interest.
The Niger Delta Basin must be used for the advancement of the Nigerian people. We must collectively take those steps that will protect our inheritance, even as we work with our foreign partners for the advancement of humanity.
Nigeria's petroleum ministry says the new law will recoup nearly $300 million a month in lost tax revenue. But oil firms say it will make future exploration in Nigeria unprofitable, driving away investment in Africa's biggest petroleum producer. Anne Picard is the regional executive vice president for the Shell Oil Company.
And the bill as we've seen it, under the bill as we've seen it, $50 billion will not be invested that would have been invested. That money will go elsewhere. Nigeria can't afford to lose those years or those projects. Nigeria needs cash to invest in infrastructure and development. Nigeria needs cash to grow its domestic gas business. Delay will derail the government's vision of 2020 and mean that Nigeria will lose competitive momentum.
Nigerian oil and gas production has fallen by more than a quarter since 2005, largely because of a rebellion in the oil-rich Niger Delta. That's now slowly returning to normal since thousands of fighters accepted President Yar'Adua's amnesty offer 5 months ago. Acting President Jonathan says he's working to secure the gains of that amnesty and better share the profits of Nigeria's oil wealth with people in oil-producing regions. But uncertainty about peace in the Niger Delta has led to greater investment in offshore fields that are less vulnerable to sabotage. Foreign firms say that's threatened by a petroleum bill that they say would make Nigeria one of the world's harshest climates for oil investment. At a time when Angola is threatening to take the top spot in African production, Shell Oil's Picard says Nigeria cannot afford to make mistakes that will take years to correct.
What you have to deal with in legislation, you deal with in legislation. If you can deal with it in regulation, you deal with it in regulation. So deal with it in the right pieces. But there has been a lot more consultation in the last couple of months going forward, and hopefully we'll get to a good bill.
Lawmakers here say they have a good bill that, coupled with peace in the Niger Delta, will boost government revenue. The bill splits the old oil parastatal into smaller, profit-driven units, better able to tap international capital markets. Parliamentarians say Nigeria's take of oil revenue will still be smaller than Angola and Ghana, and the bill will ultimately keep more money invested here in Nigeria, where the government says 80% of investment now ends up offshore. Back to you in Washington.